Welcome to our next episode of Beyond the Bar podcast. We're very excited today to have a special guest, Elina Yuabov. Thank you for coming today.
Thank you for having me.
Elina comes with a wealth of experience under her belt in securities transactions, mergers and acquisitions, and it's a new area that we haven't had as a guest on our show, and we're very excited to learn all about it. Thank you so much for being here today. Thank you, Oksana. Davydova, my co-host. Let's begin.
Yes. Great. Before we begin, Elina, do you want to give us a quick background in terms of what do you practice? And then we'll go into, different types of legal strategies, legal questions we might have or anything like that.
Yeah, so I understand it's kind of a new area of law that I want to give everybody a taste of. So a little bit different than what I think people in our community are used to in terms of areas of practice.
How was your law school experience?
I know what kind of learner I am, so it wasn't the biggest humbling experience that I think others may have had. I think law school, you just have to remember, is a moment in time, a very expensive moment in time, but it is a moment in time. But it is a means to an end, and you'll be a lawyer for life, and you can do so many things. So I personally enjoyed the experience. I had time of my life at the bar, just because the whole summer you spend, studying, and just you really have that time to yourself, whether you want it or not. And it really makes you focus on your goals and kind of what the next part of your life is going to look like after the bar. So that's my experience.
Did you have preconceived notions which area of law you wanted to go into?
Zero. Absolutely zero.
I think you graduated around the same time when there was the market crash, right? Everybody was reeling from the crash, and we was trying to figure out, the legal jobs out there, which were not many.
No.
And I think, did that kind of, segue you into the type of area of law you went into?
I graduated in 2012, so it was on the heels of the financial crisis. I just kind of happened to, I think wanting to be challenged is always what drove me in terms of what I wanted to do, and continues to drive me today. When I graduated law school, I had no job prospects, and I just sent out so many resumes, did so many cold calls, where at one point I had about 10 interviews in 1 week. One of those interviews was with an investment bank, with a swap dealer. And I still remember it was a Thursday. I had to come in on 6th Avenue in the city. That's where was the entrance to the building. And I thought to myself, 6th Avenue, what is 6th Avenue? Anyway, made my way in. They did a case study, which is unheard of, I guess, in the law. They gave me a whole thing of, what would you do in this scenario? We have an asset here. We have an entity trying to borrow. We have an entity trying to buy. How are we going to value it? How are you going to paper it? So somehow going blind kind of muddled my way through it. And I got the job on the spot. So I suppose did decent enough that the guy said, okay, she knows what she's doing, or at least she is trying very hard. So I got the job, got my foot in, and it was myself and 2 other girls, women. This was, again, on the heels of the financial crisis. So Dodd-Frank, it's a regulatory regime. It was kind of an overhaul from Obama and the CFTC to make sure that something like Lehman does not happen ever again. So people, I think, in the industry didn't realize what kind of a behemoth Dodd-Frank would become. So the powers that be in these investment banks, they're like, okay, give it to the new hires, give it to the associates. It's not going to be a big deal. Give it to them. Lo and behold, it turned into what it turned into. And myself and these 2 other women became the subject matter experts. So we were making new templates. We were educating the desk, the traders, on what they can do, what they can't do. We were speaking at industry conferences. I ended up hosting a CLE at St. John's about this to kind of give the future generations a window, because things like this don't really happen. And those opportunities they don't know that they're there. So I thought, okay, at least I know a lot of my community go to St. John's. This is where I want to offer it. And so we offered it. We had the course, but that's kind of how I got my start. I worked every single day at some point in the first year for 2 months in a row, where it's the point where I did not know what to do with myself when I had a day off. The 3 of us worked day in, day out, Monday through Monday, because there were deadlines, because we were working with such demanding personalities. We could not say, I don't know. We had to read through the statute. We had to read through whatever industry guidance there was and figure it out. And whatever they said, okay, give it to the lowly associates, the new hires. We ended up kind of really managing our own team at some point, building out the department at some point. It was really right place, right time, but also the grit, because people came in and they couldn't handle it and they left, or we would have to let them go because, again, the demands were very high and, we had to deliver. There wasn't an option of you can't figure this out. You need to figure this out. The desk needs to trade, the bank needs to make money. One of the banks got fined, billions of dollars. So the stakes were high. Your name is on it, even though you're not signing, but you're giving it to your managing director. The managing director, there was so much volume that they didn't have an opportunity. One, they didn't know what they were looking for because we were the subject matter experts. And they had so much volume, they had to trust us. So we had a lot on our shoulders. And it was a great learning experience because you were doing the job of so many others. Like we started with 3, and then our team was about 20 in that bank.
Wow.
But for some period of time, it was just the 3 of us doing everything. So we got to learn about the credit writing process, underwriting for all these type of deals. We got to learn about a lot of different industries because, hey, someone wants to do a weather swap. Some farmer needs to offset his risk against his crops not getting enough rain. We had a koala farm. We had a Parmesan cheese wheel we had to underwrite, a vault of Parmesan cheese that we had to figure out what the valuation was so we can figure out what the right margin was when the guy's posting collateral, right? He's posting collateral in the form of these Parmesan cheese wheels. He has his valuation of it, of how much it costs, how much, the swap was 10 years, 15 years, 30 years, whatever it was. There was also changes about timelines for all these derivative transactions. And, whether we liked it or not, we had exposure to a lot of different exotic over-the-counter products and industries, and obviously dealing with the personalities on the desk and being accountable and working day in and day out. So that was my start.
So, yeah, you were basically thrown into it.
Yes.
And you had to learn it on your own and kind of just go with it. How did you manage the stress of all this?
I think you just take it day by day. We just took it day by day because, again, there was no guidance. There was no case law. There was nothing.
You were the case law.
We were the case law. We were the statute. We had to build a compliance manual for the desk. And we said, okay, we need to do this. We need to do that. Some of their trading partners had to get removed because they weren't eligible participants on the market anymore based on the regulations. So those were really difficult discussions as well. We said, we can put them in this category, but you can't do these type of trades with them anymore. So with Dodd-Frank, it also introduced a private right of action. So, the banks were very much exposed if they're trading with someone I use someone, but there were some high net worth individuals, but largely companies, big companies that don't meet those thresholds anymore. And it was a bit scary because, again, if you approve a trade that goes through on the legal side, credit approves their part, everybody has a role. And that trade fails, and you have a disgruntled counterparty on the other side and says, well, they really should never have sold that to me because I don't qualify. So I will personally sue the bank. And they can. So that was another kind of thing we had to manage when we were, playing the boogeymans at the desk. Don't trade. You cannot. We advise against it unless they self-certify that they are qualified as an eligible contract participant, just as an example. So that was my start.
Wow.
Yes.
That's intense. Definitely.
Yeah.
So,
But it was fun.
do you still do that, or do you do something else now?
I still do that. I do it on the other side now for the market participants who want to buy these types of different transactions from the dealers. Mm-hmm. For example, some of the guys on 47th Street, right? They have a lot of metals and they are at the mercy of the market with the metals going up and down. So one thing they do, again, we have introduced is to offset that risk against the physical inventory they have is to do a short position on metals. So if the metals go down, they offset and hedge off and offset their risk on the metals that they hold. And if the metals go up, whether it's silver, platinum, gold, then their inventory goes up. So they hedge their risk. And that's the whole idea behind the swap market, so to speak, and my role to help them recognize where they can offset their positions, whether they're physical inventory or that weather swap or what have you.
Are you still working for the same company, or are you working for someone else?
No, I branched off on my own a couple of years back. A lot of people thought it wouldn't be possible in my industry. I don't think it would be possible if I didn't have, 10 years under my belt working with the sell side, with the dealers, and then working with the buy side, investment managers and hedge funds and whatnot. I think without being in it for as long as you have, getting to know the people, because it's a very small industry, it would be very difficult to do this right out of law school because you don't really know.
Were you able to take any of the team members from your...
No. That we couldn't
So
do.
you had to start over from scratch and build your team up.
Had to start from scratch, but I brought with me obviously the wealth of experience and then the contacts, I think, most importantly.
So now you said you used to do the sales side, so you were working for the banks, and now you work the other side, so you have the consumers,
Correct.
essentially.
Correct.
And the consumers, you teach them the law you practically wrote.
Well, no, we didn't write it, but we helped interpret it. We helped interpret it.
Yeah.
But yes, it's interesting because every company, no matter how big or small, they need to have exposure to these type of things. And we help them identify, hey, you have a risk here. You are at the mercy of this market. You're at the mercy of that market. It could be manufacturing, right? Someone who is importing things from China or Thailand or whatever. So we introduce certain things that can help offset that risk in their business. We also do, equity raises, capital raises. So if a company needs to make money and they don't want to take a traditional loan, they can raise from their network. There are exceptions from that with the SEC. They can do a crowdfunding offering. There are options. You don't always need to turn to hard money loans, and you don't always need to turn to an institutional bank. You have a lot of resources at your disposal that people may not be aware of. No matter how big or small, these options are available to you.
So for the regular consumer, right, or small business or even a big company listening out there, can you just break down what is like the difference between the hard money loans you were talking about or institutionalized banks and their percentages that they charge and the type of funding you're talking about in terms of like what makes or breaks it for them? What's more convenient?
I think it depends on a few things. One is time on your hands, because if time is not on your hands, the hard money loans is the way you're going to go. But also with hard money loans, you have to understand that their contracts, they are prescribed by statute. So if their contracts do not adhere to the requirements in the statute, there are options for you. So to the point where the statute requires certain text be unambiguous, bolded, capsed, underlined. If their contract has language that's not the same terms, but they're not bolded, they're not underlined, and they're not caps locked, that contract does not adhere to the statute. So there are things that I think people need to know. And, we represent merchant cash advance lenders as well. We help protect them against these type of things. And we also represent companies who, if things go south, we review it and we say, here's where you may have some wiggle room. Let's speak with them because, when you borrow funds, you have a responsibility, contractual liability to pay them back. No one is trying to wiggle out of their responsibilities. It's more of, we need everyone to be on the same playing field. And that's where my job comes in partially. So if time is against you, merchant cash advance is the way to go just because you need it. And, their fees might justify, the cost of borrowing can be justified based on your needs. Beyond that, traditional loan, going to JP Morgan Chase, going to TD Bank, going to wherever, Citi, and getting a conventional business loan. You could do small business loan. So it really depends on if you want to go through the hoops and rungs of providing everything that they require so that their underwriting team can approve your loan. But that takes time, 30 days, 60 days, sometimes longer, unless you're harassing them on a daily. And even then, it's a process. Outside of institutional lenders and hard money lenders, you can turn to your network. And that network, whether you want to do a traditional raise in terms of giving them equity in your company, or if you want a loan from them, we can do that as well. Loans can be protected for the individual giving you funds, whether it's in your family and friends, with, a UCC lien or a COJ or something like that to give them comfort. On the other side of it, you can give them a warrant, say, hey, my company, I think is going to really grow. Let's invest with me. I'm going to give you an option to exercise, a strike price, and you can buy into this company at a lower rate, and I'm going to take your loan and it's going to convert into equity after a certain period of time. And depending on when certain things kind of get triggered. So we lay out these options and many more to kind of educate them that you're not stuck into a corner. You're against the wall and you have room to move and try to figure out what works best for you.
No, it sounds like lovely. Yeah, I've been really educated just by you telling it. Like, I didn't know a lot of these first of all, the terminology and the whole process. I didn't know about all these. I thought that there was just conventional loans. You go to a bank, you get a loan, and that's it.
Yeah.
But there's actually a lot of other ways.
Yeah.
So when you decided to go out on your own, are you working out of an office space? Are you a sole practitioner? Do you have what kind of a team do you have under your belt?
So I have a satellite office in the city. If I need to go, same on Long Island, I can work from home. So I'm trying to make it as flexible as I can. I have a great team of paralegals that I lean on for intellectual property, things like that. But right now it's just myself, and hopefully I have an issue delegating.
Yeah.
So it's really hard, especially in my line of work, to offset, because I think the wealth of knowledge is not going to be the same. And I wouldn't feel comfortable when clients trust you with these type of things. I wouldn't be comfortable giving it to an associate just yet, because you have to train them, and you can't really train them on someone else's
knowledge.
No, right. I don't want to expose their business, and NDA is one thing. Sure, we can offset those type of things, but if there is a warehouse facility loan, I don't know that I could trust someone as an associate as I bring them on just yet. It needs someone more senior, and that's been a little bit of a challenge. So I'm on the search actively. But
so your clientele, who is your mostly? What do they consist of, your clientele right now?
it ranges. We have a mine in Bolivia, which is very interesting. We have courier companies. We have manufacturing companies. We have trucking companies. It's very different. It's a whole host of different.
A mine. How do you get a mine in Bolivia as your client?
One of their investors, he had turned to me because he has some. I don't know how much. I'm trying to speak in anonymous terms. He is an investor in an entity that has a patent for certain types of medical equipment, and he's an investor in their mine. He got in early. They're doing great, and they needed some help on the transactional side. So he introduced them to me, and that's kind of how the relationship started. So again, it's through the connections and word of mouth, and
Referring of referrals, basically.
Yes, yes.
Oh, that's amazing. That's so interesting.
I know. I was like, but do you do work you do for them? It's more international, or is it their practice looking to come into U.S. grounds?
It's both. It's both. I mean, the world is very small. Now I feel as though the world is teeny tiny. You can have a company incorporated in Serbia and they're doing business here because there's a need to do the business here. And it's all interconnected. So also navigating the regs, and cross-jurisdictional issues. For example, with loans for foreign borrowers and U.S. lenders, there is this concept of a gross up. So there are tax treaties between all the countries, right? So one of the provisions in all these tax treaties is how you treat interest received from non-U.S. entities that you loan to. There are plenty of U.S. lenders. They lend out to non-U.S. borrowers. Right. So you need to be a qualified treaty lender, so to speak, if that's the terminology we're using, so that whatever interest payments you are getting from that non-U.S. borrower is going to be interest-free. They have their own withholding. So how do they know whether or not they have to withhold from you when they're sending you your monthly payments or quarterly payments or what have you? So those are the things that we also have to look at and incorporate in to the lending documents. Hey, we're not a treaty lender, but we qualify because of the statute or because of, this provision in the treaty. And it could be UK, it could be Bolivia, it could be wherever. So you have to also keep that in mind if we have cross-jurisdictional issues.
Mm-hmm. And for contracts like this, how does your retainer work? Do they pay, is it billable by hours? Is it by project?
It depends. Depends what they're comfortable with.
Mm-hmm. So you give them options.
We give them some options, yes.
Okay, I was just interested because,
it's not contingency.
Yeah,
that's for sure.
No, definitely not.
I couldn't imagine that be a contingent.
No.
There's a lot of work that goes involved for every project. I'm sure it takes hours.
And a lot of deals, you'd be surprised. There are some sticking points that come out that just, you see the CEO, not the CEO, but, whoever the decision makers are on both sides. And sometimes they are attached to the weirdest things. Like one deal, it didn't go through, but where it died was in an espresso machine that just, was an asset of the company. You think assets of the company, cars or this or that are either transferred or bought out or what have you, or you adjust the balance sheet, whatever it is. And this one deal hinged on some like espresso machine that the founder was really attached to. And the new guy was adamant that he wants it. And he refused. I mean, it's like $600, right? How much could this espresso machine be? It was years ago. It died on that. After all, I mean, it was the better part of a year and it died on that. So I think there could be, we always joke in the industry that there should be a separate schedule for weird attachment issues for founders and just have a whole thing there. But that espresso machine, that was just ridiculous.
Yeah.
Wow.
Whatever. So they just left it.
They left it.
I can't imagine.
Or, we had one deal where it was owned by a public figure and he got arrested. He was in jail. And, the CIO of that firm's like, just keep going. And we're like, just keep going? He's in jail. He's yeah, but it's still the company's still going. He's a bit questionable, but he's really smart. We said, okay. So we just kept going. And the owner was in jail. And he's still in jail as far as I know. And that died out. But the point is, where there is potential, no one's going to care. And they're going to keep going and they're going to want the deal. And it could be 3 o'clock, 4 o'clock in the morning. And you see news that someone got arrested on the deal that you're working on. And you bring it to, the CIO that's in charge of it. No, we'll just keep going. We want to buy it. We have interest.
Wow.
Okay, then.
So what happens when these contracts don't go through or these deals don't go through? Like all the work you put in, I mean, I know you bill in advance or they sign a retainer, but like what happens with these type of deals? Do they just are they stuck on it or do they just go, you know what, that's fine, we'll go on to the next deal?
I think it's part of the industry where if it just doesn't work out, it doesn't work out. No one's married to it. It's very much, okay, we'll just look on and try to find another target or try to position ourselves for this or try to position ourselves for that. That's another thing, companies, if they want to position themselves to be bought out, there are certain things you should be doing, in terms of governance, in terms of strategy that, don't wait till the 11th hour when you realize, hey, I need funding or I don't want to do this anymore. Position yourself to be where you want to be 5 years from now, 10 years from now. And that includes the corporate structure. That includes working with your tax specialists and accountants and your lawyers, saying, hey, if I want to be bought out, some AI companies, for example, that I work with, they don't have a structure because it's 2 guys who are brilliant or 3 guys or women or what have you. And they're doing what they're doing. They're growing their business, but they forgot to put all the, bolts and pieces in place so that when there is interest, we're now scrambling to put a structure in place.
Right.
Oh.
And that tends to happen a lot. And I think that happens a lot in every community, not just ours, because the business owners, they have their vision, they're executing their vision, they're doing it greatly, right? They're really going above and beyond. And what they should have delegated to, to their attorneys, to their tax specialists, they just never got to it or thought maybe it didn't bring value. But it does bring value. It brings a lot of value because when you're executing your vision and your company's growing to be, multi-million dollars or what have you in a couple of years, what then? You have to bring someone else on to kind of put the pieces together of where you want it to be for the next step. So that's important to kind of consider as well.
Yeah, that definitely is. You had mentioned earlier that when you had first started out, you had a team of 2 other women, and it was you. So it was 3 women basically that started out this whole project and you continued throughout, and you had a lot of responsibility. How did you manage with I can imagine that this industry is very male dominated. How did you manage with that? With the other men in the company, in the corporate world?
Yeah.
Was there antagonistic relationships? Like how did you go about with those?
It wasn't an unspoken thing. I think everybody was very much aware that you have these 3 new grads, young women who are kind of driving the ship, at least at the bank that I was. There are a lot of different banks. And, you come in and you realize that you have to speak with authority and you understand that nobody knows this better than you do. And you have to, speak to that. And, there were occasions where I think people would try to undermine what you're saying or maybe just try to find a different way. And you entertain it, but you also say, this is not what this is. You misunderstood, in an eloquent way so as not to ruffle any feathers or delicate personalities or sensitivities or whatnot. But you just have to find your voice and use it and don't be afraid. There was one deal that it was a new firm that I was representing. And I came in, I think it was my second or third day representing them. They had a deal with Capital. They are huge in the market. They were part of a syndication, which means, it's a bunch of different lenders coming in for one bar. It's like couple of $100 million. Like nobody, those are always typically syndicated. So is on the other end of it. They're the admin agent. Everything's been negotiated. I come in 2 days after I start. They said, okay, we just need legal sign off on this. I'm reviewing it and I'm reviewing the term sheet. I have a call with, the business who brokered the deal and, going over the terms. And as I'm reading through it, and it's, hundreds of pages long, right? The lending agreement. And a lot of it becomes standardized because you read it over and over and over again, these type of terms, and you become familiar. And something stood out, and I'm looking at it, and I'm reading it, and I'm thinking, this is not fit the term sheet. This is not what the business said. So I don't want to blow this up, right? It's a relationship that they have with, but at the same time, I don't know if they signed off on this. So I'm like, okay. I called the CIO, I spoke with him, and I said, here's the issues that I found. I'm going to send you an email. If business has signed off on it, great. We're fine, we're gravy. Feel free to sign. I cannot sign off on it because there's a discrepancy based on what you had told me, based on the term sheet, based on the term sheet itself, based on the offering agreement, based on the subscription agreement. And this agreement, there are some things that do not line up. We caught it. The CIO was not happy. Not that he wasn't unhappy with me. I'm sure he was a bit frustrated that we have to now go back to them and say, hey, fix this. Did you try to, get one over us or whatever? We got them back to the negotiating table. We fixed it in the side letter. The other lenders who didn't catch it, I guess that's their problem. But for us, we caught it. And I worked until God knows what hours, over the next day or two. And I actually got sick when it finally closed because I think the adrenaline left my body. Because you're just coming in and you're about to blow up a deal. And, he could have taken it very, very differently. But I spoke very matter of fact. I said, here's what it is. Here's what it's not. If this is not your understanding, we need to fix it. There's nothing controversial about what I'm saying. This is very much what's going on. So they took it in stride. Then they were grateful that we fixed it. And the counsel afterwards also spoke with us and, apologized for their error. They said they would revisit it for the other lenders. I'm not sure that they did. That deal has since matured. It's been a bunch of years for now. But, things like that you have to navigate because you just don't question yourself. You know your stuff.
Right.
And speak with it with authority and, put the personalities aside, put your own sensitivities aside. You have a job to do and you care about this job and you want to make sure it's right so that by, a couple of months down the line, the business is asking, hey, where's this? Where's that? You're positioned to say, you didn't want that. Remember, you signed off on it. Or we tried and we didn't get it. You have to anticipate, at least in my line of work, questions from the business on where this is going. So I think with that in the background, it helps kind of navigate the conversations to have, as difficult as they are. Because those questions are coming and you need to have an answer to them. Even if that answer is, you said you didn't want it. Here, look at it. And have a record of it or things like that.
Yeah, I think as women, we usually tend to shy away from situations like that, especially with, a transaction like this and being new and speaking to, the higher ups that are very probably more aggressive.
You learn to be aggressive. You don't hold back in this industry.
Yeah,
you have to be.
That you couldn't be, right?
No, you can't. Because otherwise, you need to speak with you need to acknowledge that you know what you know. And you need to acknowledge that the people sitting on the other side of you will respect that.
Yes.
And it's, if you know your work, if you know what the market trends are, if you know the laws, if you know the case law, you know exactly what you're doing. And no one will ever fault you for having questions. On the other hand, I think they would thank us and say, hey, by the way, fix this, fix that, raising this for awareness, even if we have no negotiating room, just so your eyes are open when you sign it. Right? Because it's a lot of funds. It's a big commitment. And you have expectations with that commitment. So we want to make sure that your expectations are met. And if not, that you're aware of them and you can't blame legal.
Confidence is key. Yeah, you really have to be assertive and confident about what you know and your skills.
So based on what you're describing, it seems like you don't do 9 to 5, you do 24 hours a day. Because it seems like there's strict deadlines and things happen at the 11th hour. Can you tell us a time where a deal almost did not go through because of like an 11th hour issue?
It happens a lot.
Yeah.
But I think in my line of work, you have to really care about these businesses in the same way that their founders care about their businesses, because you don't have the benefit of time on your hand in some situations. So I can tell you, I was abroad with my family in Israel at the time, and something came up. It was amendment to a deal, and it was about leasing equipment. And I don't remember the details of it, but in any event, we had to review it and we had to get it signed off. I have a time difference, so they sent it to me when they had it, but obviously I had -9 hours or whatever the time difference is at the time. So I really had essentially about 4 hours. I didn't have my computer on me, or God knows where. So I'm trying to do it from my phone, and I used my husband's phone, I used my phone, I used somebody else's phone just to speak with. And everything's on WhatsApp, right? So I'm calling this person, having him on the line, calling this guy on the line, trying to read it from my phone, trying to explain things to them. Then I have to call their deal counsel. We made it work, but it was, it was 3-4 hours of really stressful time. I had to stop everything I was doing and, hole away into, I think, the kitchen of the restaurant at the time.
How did your husband react to all this?
He's supportive, so it was fine. But, it's you have to care. You really have to care, because otherwise, they lose the opportunity and they lose that trust in you. So they have to trust that you care about their business as much as they do, because those deals are oftentimes sensitive when things like that happen. And if they lose it, they lose not only the trust in you, they lose the deal, but they also lose their relationship with whoever's bringing that to them.
Yeah.
So it's kind of a ripple effect, and you have a responsibility in the same way they have a responsibility to respond and make sure that they're doing the best they can for their business and the trajectory. And they bring it to you and they're trusting you to look at it. You have to look at it. So,
Wow.
But yeah, in the kitchen of a restaurant, hold away.
I can imagine. Did you have other people with you? What were they? I'm
There we did.
Like, goodness.
They know already.
They know.
So I think it's okay.
No, that's good to have an understanding and supportive, family about that. So, you also had mentioned that you do mergers and acquisitions. As part of your. Can you describe some like a deal that you had done with that?
Oh, there's a bunch. Pick an industry.
So just, to clarify, you work with different industries. It doesn't matter the industry, because at the end of the day, the paperwork, I guess, more or less is the same with regards to the deals.
The paperwork is not the same. The skeleton of the paperwork is the same. Certain things that one would not think about. But every whether you're buying a pharmacy or whether you're buying, a conglomerate, of the guy in jail, every single industry has certain things that need to be captured in those purchase agreements. And that includes representations about how that business was operating in the past. That includes some regulatory things. That includes, not just the assets and the phone numbers and everything else that you're buying, or the intangible assets. Maybe there is some goodwill you want to purchase. Maybe there is, outside of the trademarks and the names, there are things that need to be discussed specific to each industry that people don't often, or that are often overlooked. Because a handshake is a handshake, but what goes beyond the handshake is where, good lawyers step in and say, okay, you agreed to buy the business, but what does that business mean? Because this person, it could mean everything except that espresso machine, right? It could mean everything except this, or I'm holding on to this, or I'm holding on to that. So I think really understanding what you're buying is, and having that skeleton outline of diligence beforehand, that's where, an experienced attorney comes in. Again, no matter what it is that you're buying. And no matter it is how much money you want to raise, whether it's a loan or equity, borrow from family and friends, but it's really just your network. You can have, that's what the real estate, so we do some real estate deals, right? We set up general partner, limited partner deals where you have one managing partner, and then you have limited partners that come in. They have no voting rights except for some sacred rights that we built in. And, they have transparency to the extent that we can negotiate it for them. But the GP he's running the show, the general partner. And the limited partners, when they come in, they have to sign a subscription agreement. We review their operating agreements. So we tell them, hey, you're getting, your K1s at the end of the year. But do you want monthly reports? Do you want conflict of interest stuff? If the manager is doing something with his brother's company, do you want to put some investment guidelines in there that says, you can't invest these funds outside of, these categories of developments, all these type of things. It's not just, hey, sign on the dotted line. I trust you. Have a nice day, which I think it used to go a long way where a handshake was a handshake, but I think things have changed.
Yeah.
And I think that the community should change, can acknowledge that and move with it a bit.
So specifically with our Baharian community, do you have a lot of clients, or do you have a good amount of clients that you have to, I would assume that there would be a good amount of education that you would have to instill in that.
We're trying. I think I do have Baharian clients, and I think it's great that, those that are open to these type of things and, opening the door to different kinds of opportunities and also different kinds of ways of thinking about the business.
Right.
So, I'm grateful for that. I think the community, there's a bit more education to be had, but I really think that we're on our way. I think everyone should be very, very, very proud of where everybody stands today. We've come a long way. We're going to go even further. And I'm really proud, to be Baharian. I'm very proud to be a Baharian attorney. I'm very proud of my Baharian clients, no matter how big or how small, just because everybody is willing to learn, even if they don't want to move forward with things. I'm very happy to educate them about these type of things. And, stickler to details, maybe I'm overly detailed in my explanations to them or offerings to them, but I'd rather they have more than less. And, I think if they know about these things, they'll tell their friends, and everyone will just know a bit more that there are other fields of law and, their business can benefit or not, but maybe their kids will want to learn about it, or maybe who knows. So I think all of us have that responsibility to just, whatever we're doing, share it. So
with that said, for the youth that are watching, because we do have a lot of youth that watch this podcast, would you recommend to go into securities and transactions, mergers and acquisitions? And how would you suggest they get their foot in the door with that?
I think, if your personality is fit to it, I think you certainly go for it. It's a lot less hand-holding in a sense. You're typically working with clients who are used to working with lawyers. It's not kind of a first thing for them. So in that nature, but also, again, you have to care about their business as much as they care about their business. And if a challenge, if being challenged is constantly what guides you, then this is probably a good home for you. In terms of getting your foot in the door, you have to knock it down. Attend conferences, do your homework, reach out to people that speak with your law school. I tried to get St. John's to have a class on it, to, whether it's an adjunct version or not, just to have more kids be aware of it. And, but yeah, you really just have to do your diligence and try to figure it out.
You're a very good speaker. Would you have ever considered teaching?
I have, but I did that CLE course where I hosted, and there were a host of questions, and you have to command the room, and it's fun to do. I think I prefer to practice, but it's not something I would rule out.
Okay.
And before you and I got together, you were saying that there was a recent change in regulatory statutes, I believe, right? And you wanted to discuss a little bit further?
On crypto, there is a pilot program from the SEC to basically put them on, to be able to use them more as how do I explain this?
Cash.
No, it's not that it's cash. It's just more easily tradable. It's a very big deal. It's a 3-year pilot program. They haven't picked the host of it. But before, if you wanted to purchase Bitcoin or purchase any of these kind of crypto things from the market, there was a whole host of, hoops and ladders you'd have to go through. Now they're trying to streamline it a bit, which is kind of economic history in that sense, because we are witnessing a big change from commercial paper to crypto. And when you are working with banks, for example, if you're taking a loan, most people have collateral that they post, whether it's a house or whatnot. A lot of companies, what they post is bonds, treasuries, things like that. and there are haircuts. So if you have $100 of bonds, they will give you, it's a pretty liquid asset. So they'll give it like a 2% haircut. So it's really $98 instead of $100. What they're doing is going to allow the introduction of crypto really more so in that sphere as well. But that's a whole different thing. For the COPA laws, I'm sure you guys have heard it. So they have changed, Adams vetoed it, but I think Mamdani's going to push it through, where if there is a multi-development property or a multi-family property rather in a community, you have to first give the right of first offer to nonprofits in that.
Oh, I heard about this. And the government before you
Yes, before you can solicit to third parties. It's only applicable to certain types of properties. Single family homes are exempt. They're not part of it. And there is a little bit of wiggle room in the sense that they can partner up with qualifying entities. And that could be a nonprofit that partners up with an existing development company, real estate company that has experience. There are certain prongs that they have to meet, elements that they have to meet in order to qualify. So I think it also serves as a good opportunity for the community, at least in the real estate, to partner up with nonprofits, whether it's, nonprofits in the community or outside the community, to give, a home to their mission. So it doesn't mean that case closed, no one can buy multi-development properties anymore. On the contrary, it's giving an opportunity for the nonprofits, and the real estate developers have an opportunity to partner with these nonprofits. And there are ways to do that. So it actually might work to their benefit because now they have a right of first offer to come in and buy something. And something that, if it's passed as is interesting with this one. It also introduces a private right of action, the same way that Dodd-Frank did, which means that if one of our developers gets wind that some company sold their building to someone else that's not a nonprofit, or didn't give the right of first offer to the nonprofit, or didn't meet one of the exemptions, they can personally sue. So that's a very big deal. And I think if people really read the statute or hire an attorney to help them navigate it or prepare for it, because I think the odds are against the city and that it would be vetoed again. In its current form, they certainly have options and it might work to their benefit.
So what does this look like for landlords right now? Because I know there's a lot of talk, especially Mamdani now in charge, in terms of, New York State has always been very tenant friendly. And now, based on the new administration, they might be even more tenant friendly. And I know there's landlords who are looking to sell it, might even want to sell now. So now because if they're multi-dwellings, they'd have to first look into giving first, to the nonprofits or the government local agencies before they consult to private.
The law's not in effect yet.
No. Okay.
To my knowledge. I'm not sure he has signed it. Adams vetoed it, I think, on his last day. So it's been less than a month. Maybe it's officially on. I'm not really sure. If they're looking to sell, then, they should speak with their real estate attorneys to sell, and to make sure that they're exempt. And if they're not exempt, read the statute and, figure out a way to make it work for you. And if there are certain nonprofits you want to work with, or if you know developers, see if they're partnered with any of these nonprofits, for example. But again, one of my mentors told me, you never want to put anybody in the corner. And I've really taken that advice in everything I do, where you don't put your counterparty or your client or anybody in the corner. You always put them against the wall. You give them room to move. So the same way, this regulation, it's not putting them in a corner. It's giving them some room to move. Maybe not in the direction they want to go to, but there is some room to move. So avoid the panic, initial hysteria, that needs to simmer down. There are options.
Oh, it's good to know.
Yeah, definitely. I want to say thank you so much for coming today and sharing all this information. I've learned a lot.
Yes.
I really did, actually, because there's very little that you know other than the classic loan, like I mentioned before, but I learned a lot, and I think our viewers are going to learn a lot. And you giving us another option that for the youth that want to pursue law, that there's a great field of securities, transactions, mergers, acquisitions, and it's fun, it's adventurous, it's exciting.
Yeah.
It can be challenging, and for those who want to try it, it might be a great fit. and it's something that they should explore. I'm not sure. Do you ever take interns? If somebody ever wanted to reach out, would you consider, putting them into an office and giving them a little bit of background?
Yeah, we can do that. We'll start with the test that that bank gave me on the day of, where I came in and they gave me a case study and they said, figure this out. So, just warning everyone now, if they're reaching out, I might do that.
That's a good idea.
I think it's actually a good idea.
I think I might do that to my next if I get it next time.
Yeah, because you want to know how the person thinks.
Yeah, I think more than anything, that's probably what it was. They're looking at how you think instead of how you answer. Because I'm not confident that I answered any of that correctly, but
you probably got to the right
I found my way. Somehow
you navigated.
That's isn't that essentially practicing law?
Yeah,
You don't have to know everything. It's how you navigate and get to where you need to go.
I agree. You're right.
Thank you for being here
Thanks
today
for having me.
enlightening us in this very interesting field of law.
I'm glad.
Thank you.
Thank you.